Hello traders and welcome to another video review. Today is Friday, November 25th, 2022. Let's find out what can we find on the Forex calendar today. What we got here are some data from Japan, Tokyo Core CPI and the CPI, Tokyo Core CPI excluding food and energy. As you can see, the core CPI in Tokyo increased from 3.4% to 3.6%, beating the expectations of 3.5%. So the inflationary pressure of the consumer price index is still going up. The German GDP for the third quarter had been published already, and we got the number of 1.2%, which is better than expected, 1.1, and lower than 1.7 for the last time. The general German GDP is at the level of 0.4. The JFK German consumer climate is now on level of -40, which is worse than expected, -39.6. And during the rest of the European session, we got some speeches from the European Bank Supervisory Board and the European Bank, the Guidos. He is in the Supervisory Board as well. The market of the markets in the US will likely be closed due to the yesterday's Thanksgiving holiday. So doesn't look busy this session. It doesn't look very hectic in terms of the data release. So let's switch to the technical part of this video, and we will start looking at the charts. Euro-dollar 4-hour chart looks bullish, despite the 4-hour chart momentum hit the extremely overbought conditions. The momentum is still positive, is still strong, and so is the market of the euro-dollar. It looks like the bulls will continue to move higher in order to complete the wave A. First, we have to hit the wave 3 high located at 1.0480, and then of course they can hit 161% Fibonacci extension located at 1.0623. So the outlook for the euro dollar still hasn't changed too much. We are still developing the impulsive wave to the upside in order to complete the wave A. So after the wave A is terminated, of course there will be bigger decline in wave B. So we will see where the target for the wave B will likely to be settled, and then there is still wave C to the upside missing on this chart as well. The euro dollar to the Japanese yen daily time frame chart is showing us another extension to the downside. The recent drop was -9.4%. Then we got a small bounce, and the market is now reversing lower. First day, second day, third day in a row. Now it's a Friday, so it might be a fourth day in a row when the market is going lower. So in that situation, there is still possible impulsive decline in the US dollar to Japanese yen. What I mean that this can be wave A or 1, this can be wave B or wave 2, this can be wave 3 or C, and now that can be the corrective wave 4. So we are waiting for the wave 5 to the downside. If this is the situation, then of course that's the worst situation for the bulls, because the impulsive decline from the highs at 151.96 means that this kind of a decline might be simply deeper. We might go as low as 151.50, whereas the last important technical support. However, please notice the fact that we might even decline lower. So it's very good right now to keep an eye on the current developings to the upside and especially to the downside, because it might turn impulsive, and that's something with much deeper consequences than the usual ABC corrective cycle. Let's take a look at the British pound to Japanese yen. So the daily time frame chart of the British pound to the Japanese yen is quite similar to the US dollar to the Japanese yen. We got the recent decline, minus 5.22%. ABC to the downside is done. Since then, we've been moving a little bit up inside of this. Let's say this is kind of a. It might be even a channel, yeah. Inside of this, you know, it can be a channel like that. There you go. So inside of the channel, we've been moving up. However, right now, the move to the upside was capped at the level of 168.70. There is a pin bar here, so let me just make it bigger. There's a nice pin bar here, and the market might start to move lower. So if this is the ABC corrective movement to the downside, that might be considered as a wave X, right? So that price action inside of the channel is the wave X. Now we are waiting for the confirmation that another ABC to the downside is done. So what we are right now waiting for is another decline to the downside in form of the wave A, wave B, of course, and then wave C. So this is what we are looking for right now. Let me just show the wave. There you go. This is what we have been looking for: wave A, wave B, and wave C to the downside. So right now we still wait for the breakout. We need a breakout in order to develop wave A, then of course bounce in the wave B, and then decline in the wave C, possibly going lower than the 38% of the Fibonacci retracement. However, any breakout to the upside will invalidate this scenario and will expose the highs at 172.03 directly for a test. So it's very good to stay vigilant and keep an eye on the British pound to Japanese yen pair. And last but not least, let's take a look at the Bitcoin. What is Bitcoin doing at the daily time frame chart? Well, we got a nice bounce here. We got a nice bounce on the daily time frame chart from the new yearly low 15,477. Nice bullish engulfing pattern confirmation, and then there you go. There is a kind of a pin bar, kind of a shooting star pattern. There you have the confirmation. Now the market is waiting for either breakout to the downside again, or they are waiting to attack one of these supply zone, which is located between 17,000 and 17,129 dollars. Any breakout above will directly expose 17,600 for a test on the Bitcoin. So if we zoom out, you can see what we are dealing with. The market lost 77% since the highs at there's 69,000. I guess there's somewhere there, up there. So this is how it looks like on the higher time frames. This trend line is no longer necessary. So we are now, of course, trending down. The downtrend is still intact. We keep making lower lows and lower highs. So please notice the fact that there is no indication of a Bitcoin reversal or downtrend termination just yet. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.